They said XRP couldn't survive the storm, that the SEC lawsuit was the end. That Ripple was done. But here we are, more than 3 years later, and not only is XRP still standing, it's been surging in both price and adoption, with signs pointing toward a historic breakout. And the question everyone is asking now is this: can XRP finally reach $10 by August 2025? Let's break it down. First, the recent price action. In the last several weeks, XRP has surged past key resistance at 85 cents, briefly touched the psychological $1 mark, and retraced into a consolidation pattern above 70 cents, a bullish flag structure forming right on top of the 200-day moving average. On-chain data from Ledger Exposed and Whale Alert shows that whales have been accumulating aggressively. Over 1.2 billion XRP has been withdrawn from centralized exchanges into cold wallets since early June. That's not a retail move. That's institutional hands preparing for something massive. RSI levels remain neutral. MACD has just flipped bullish on the weekly chart, and volume is rising while supply on exchanges is falling. A classic setup for a major upward impulse. But technicals are just the beginning. When you zoom out and look at the broader structure, XRP is forming a multi-year inverse head and shoulders pattern that extends all the way back to the 2018 crash. The neckline is forming around $1.20, and a confirmed breakout would project a target range between $6.80 and $10.10, depending on the measured move and volume confirmation. Now overlay that with the macro picture. In 2024, the SEC versus Ripple case was effectively settled, with the court declaring XRP is not a security in its native form. That ruling alone unleashed a second wave of institutional exploration into XRPL. Banks, payment processors, and liquidity providers now have the legal clarity to integrate without fear of regulatory whiplash. Ripple is expanding globally with offices in Dubai, London, Singapore, and Sao Paulo. In fact, just last month, Ripple signed an agreement with the Republic of Palau to power their national stablecoin on XRPL. Meanwhile, the company has also filed for a U.S. banking license, which would allow Ripple to serve as a full-spectrum institutional clearinghouse with XRP as the settlement rail. If approved, this would be a game-changer, making XRP not just a bridge currency, but a direct competitor to SWIFT, Fedwire, and the legacy interbank networks. But it doesn't stop there. Let's talk tokenization. According to Boston Consulting Group and Citi, the tokenized asset market is projected to hit $16 trillion by 2030. BlackRock, Fidelity, and Vanguard are already building tokenized portfolios on-chain. Ripple's liquidity hub and XRPL's native DEX are perfectly positioned to be the foundation of that system. And let's not forget XLS30D, the automated market maker, AMM, upgrade rolling out on XRPL, which will allow for built-in yield strategies and institutional liquidity provisioning directly on Ledger. This puts XRP at the heart of DeFi 2.0, but without the chaos and hacks seen on Ethereum. Combine that with the ISO 20022 messaging standard rollout now being implemented across more than 70% of the world's banks, and XRP's native compatibility puts it in the direct line of institutional payment flows. Let's do some numbers. The global daily volume of cross-border payments is estimated at $23 trillion. If XRP captures just 1% of that volume, that's $230 billion daily. With a max supply of 100 billion tokens and assuming even moderate velocity, that puts XRP's price target in the $10 to $20 range according to models by Pantera Capital and Messari. Add in retail speculation, supply burn from transaction fees, and the probability of a U.S. spot ETF approval sometime in 2025, and we're looking at a perfect storm. But what could stop XRP from reaching $10? 1. Regulatory shocks. If Congress stalls or reverses any pro-crypto frameworks, institutions may hesitate. 2. Liquidity fragmentation. If too many alternative bridges emerge, XRP's dominance could be diluted. And 3. Internal protocol stagnation. If XRPL developers fail to implement Layer 2 scaling or interoperability in time, demand may outpace capacity. But so far, Ripple and the XRPL Foundation have preemptively addressed all three concerns. The new Hooks Amendment will allow smart contract-like behavior without bloating the network. Sidechain testing is underway, and a growing number of central banks are using private XRPL instances for CBDC pilots in Asia and the Middle East. Meanwhile, XRP's fundamentals are quietly improving. Active addresses are rising. Transaction volume is at all-time highs, and the burn rate of XRP, though small, is accelerating. Just last week, over 400,000 XRP was permanently removed from circulation due to on-chain fee mechanics. That's deflationary. Pressure building every day. So will XRP hit $10 by August 2025? Based on current trajectory, it's not only possible, it's increasingly likely. The stars are aligning. Technicals support it, tokenomics support it, institutional adoption is building, and macroeconomic shifts, from inflation to dollar weakness to central bank exploration, are all driving toward a new paradigm where digital liquidity becomes essential. XRP is no longer a speculative gamble. It is a systemically relevant asset being tested in real time across real borders, under real economic stress. And as the global monetary system continues to digitize, tokenize, and decentralize, XRP stands at the center of it all. Whether it reaches $10 or overshoots to $50, one thing is clear: XRP is not done. The next bull run may not be driven by memes or hype. It will be powered by infrastructure. And XRP might just be the engine at its core. We're witnessing that role being forged in real time, beneath the surface of the markets, behind closed doors at regulatory meetings, within private consortiums of central banks and institutional players who have quietly acknowledged that XRP is no longer just a digital token. It is a foundational component of a re-engineered financial system built for the tokenized age. And while the mainstream is still caught up in Bitcoin price cycles and Ethereum gas fees, the real transformation is happening through the infrastructure Ripple has constructed over the past decade, an infrastructure that is now being activated piece by piece, and XRP is at the center of it. Because XRP is not just another cryptocurrency. It was designed with a singular purpose: to move value, any value, across borders, across platforms, across currencies, with speed, scalability, and precision that no legacy financial system can match. And now the institutions who once dismissed crypto are racing to integrate it, with Ripple's enterprise technology being deployed inside banking systems, across payment corridors, and within government-sanctioned CBDC experiments. And if you hold XRP today, what you must realize is that the price you see now is a reflection of retail uncertainty, market manipulation, and regulatory ambiguity. But that's all changing, because with each passing week, another piece of the puzzle falls into place: regulatory clarity from major jurisdictions, integration of XRP into enterprise-grade liquidity hubs, legal victories that position XRP as uniquely compliant, and growing partnerships that include names like Bank of America, SBI, Santander, and the latest wave of global fintechs onboarding RippleNet. And while the public price remains suppressed, the infrastructure and adoption curve are skyrocketing behind the scenes. And what that means for you, as an XRP holder, is that you are holding the bridge asset for a multi-trillion-dollar economy that is rapidly moving toward tokenization. And not in theory, in practice, with BlackRock, JP Morgan, Citi, and even the IMF and World Bank releasing papers confirming the shift to blockchain-based settlement. And when that shift completes, the system will not wait for the public to catch up. It will switch on instantly, and institutions will route settlement through the fastest, most cost-efficient asset, and XRP was built for that moment. Engineered with deterministic settlement, extremely low cost, and a decentralized protocol that is already proven under global-scale conditions. And you must understand this before it's too late. Ripple has already acquired the necessary licenses, including a New York BIT license, EMI licensing in Europe, MAS approval in Singapore, and is now working with regulators to fully integrate into the next phase of global finance, which includes everything from CBDCs to stablecoins to real-world asset tokenization. And the XRP ledger is not some distant concept. It is already powering decentralized exchange functions, smart contracts, institutional escrow systems, and even the tokenization of real estate, carbon credits, and central bank-issued fiat. And this is just the beginning. Because Ripple is now expanding the XRPL's capacity to onboard institutional use cases at scale, including partnerships with payment corridors in over 70 countries, and with trillions in value set to move onto blockchain in the coming years. XRP's role becomes mathematically obvious, because without a fast, neutral, liquid bridge, that future grinds to a halt, and XRP is the only asset that fits that technical and legal profile across all major jurisdictions. And if you're still wondering why the price hasn't moved dramatically yet, the answer is simple. The institutional players are still loading the chessboard, securing infrastructure, building corridors, and preparing for a transition that will happen fast, without warning, and if you wait for the headlines to tell you it's time.